Most traders think support and resistance is all about drawing a few lines and hoping they hold. But what if you had an indicator that actually shows you the levels backed by real market volume? Levels where traders actually stepped in with size, not just where price paused for a moment. That's exactly what I'm about to show you. An indicator that mixes volume profile with pivot levels, and it cleans itself up as price moves so you're not stuck with messy old lines all over your chart. So, let's get it on our chart. I'm in TradingView. Load any market and time frame you like. Click on indicators from here. Here, search for volume profile plus pivot levels. It's the one created by ChartPrime. Once you add it, your chart will look different right away. What you're looking at is powerful. On the left side, you'll see a rolling volume profile. By default, it scans the last 200 bars and slices them into 50 bins. Instead of those bulky profile boxes, this one draws it smoothly as a contour line on the side, so your chart stays clean. Every contour is literally volume traded, not just price passing through. And sitting inside that profile is the point of control. That's the price level where the most volume traded during that window. The indicator marks it with a line and even shows the exact number. You can toggle it off in the settings if you want, but honestly, it's too important to ignore. Notice how the profile shifts colors. Teal means buyers were stronger during that look-back window, and on the other hand, maroon means sellers were. So right away, you know who's in control. Now let's talk about those horizontal levels across the candles. They're not just every little swing high or low. The script first finds raw pivots, but then it filters them. To become a real level, the pivot has to have enough volume behind it compared to the point of control. That's why you'll only see strong levels on the chart. And here's the best part. Once price retests a level, the line automatically stops extending. It clears itself, so you only see the freshest levels that actually matter. Every promoted pivot also comes with a small label that tells you exactly how much volume was traded there and what percentage of the point of control that was. For example, a pivot low, showing a 61% over here, means that of the POC's volume was at that level. That's huge. If you go into settings, you can do that from here. You'll see a lot of flexibility. The period decides how far back the profile looks. A bigger number gives smoother reads. Resolution is how many bins it slices into. Higher means more detail, lower means smoother. You can turn the POC line and labels on or off. For pivots, the length setting controls how strict the swing detection is. A higher number means fewer, stronger swings. Then there's the filter percent. This is the volume test. If you set it to 20, only pivots with at least 20% of POC volume will print. Raise it to keep only the biggest levels, lower it to surface more. So how do we trade with this? Simple. Start with the bias. If the profile and POC are teal in color, buyers are in control. If they're maroon in color, sellers are. Then watch for fresh pivots. The first retest of a new pivot is often the cleanest trade because the line disappears after it's touched once.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
Here's a buy setup. First of all, we confirm the profile is teal, meaning buyers are dominant. Then a pivot low prints, with a respectable percentage of the POC volume. That's serious interest. So after that, we will have to draw a zone around the pivot using the rectangle tool. You can select a rectangle tool from here. So we will have to draw it from the close of the bearish candle into the low of the bullish wick, just like you can see I did over here. Then extend that forward and wait for the price to come down to this level. We want the candle wicks to get into the zone, or the wick can even cross the level. As far as the candle does not close below the level, it's okay. After that, we want either a strong retest, a bullish engulfing pattern, or a strong bullish candle. That's going to be our entry. The stop loss can go just below the level we drew, and the take profit can be set at 1.5 times the risk. So this is how you can open a buy position using this indicator. As we can see in this example, the trade runs, and it works beautifully. Now let's look at a sell setup. First, the color should be maroon, so we know sellers are stronger. Then we get a pivot high with good volume. The next step would be to box the zone with the rectangle tool, covering those wicks, just like as I've done over here. So now we want the price to come back to retest this level. A few candles later, price taps the zone with a wick and then big red candle growing in size. That's our sell signal. So we can enter the trade. The stop loss will go just above the rectangle we drew, which is right here. And the take profit target can be set at 1.5 times the risk. Let's see how the trade will play out. Again, the move plays out exactly as expected. These are just examples, of course, but if you follow the conditions properly, you will also be able to achieve amazing accuracy. Tip here, if you see back-to-back strong red candles right after retest, it usually means sellers are fully in control and you're not fighting the range market. Here's another clean sell setup. The indicator is in maroon color again, so sellers are in control. A pivot high formed with a decent percentage of the POC volume, which means it's a strong level. I draw my box from the body of the candle to the top of the wick and extend it forward. After some candles, price comes back and taps the zone with a quick wick. Right after that, I see a big bearish candle that closes strong below the zone. That's my confirmation. So we can enter a sell trade on the close of that candle, set my stop loss just above the rectangle we drew. When you get an engulfing candle right after a retest, it's one of the strongest confirmations you can get for a breakout continuation. So keep that in mind. The beauty of this indicator is that it's not just giving you lines to hope on. It's showing you the levels that had real market participation. It's telling you when buyers or sellers dominated the last 200 bars, and it's keeping the chart clean by retiring old levels automatically. That's how you avoid getting stuck with messy, outdated support and resistance zones. Just remember, nothing works 100% of the time. You'll still get false moves and losing trades. That's why risk management is non-negotiable. With a good risk management technique, even a string of losses won't wipe you out. In summary, volume profile plus pivot levels combine structure with liquidity. It gives you a rolling profile, a clear POC, delta-based bias, and pivot levels that are backed by real volume. It's one of the cleanest ways to map out where the market is likely to react without the clutter. This is educational, not financial advice. Always combine it with your own analysis before trading real money. If you found value in this, leave a like, and if you want more strategies like this, hit subscribe. Thanks for watching the video till the end, and I'll see you in the next video.